Hello everyone, this is Jeevakan. In today's video, we'll be discussing about how stock market works. So the topics we'll be discussing in this video are the basics of stock market, the different financial instruments to trade or invest in stock market, the benefits of being a shareholder, and most importantly, the crux of the video, which is whether stock market can be considered as an opportunity or a gambling. So we'll just get right on to the video. First topic is the basics of stock market. So what is stock market? A stock market is a place for normal people like you and me to buy or sell shares through an exchange at whatever levels we feel comfortable at. So keeping in mind the future prospect of the company, people tend to invest in it or trade in it for the short term or for the long term. So this is how it basically works, guys. So I'll give you a real-time example. If you hold Reliance shares in your demat account, which means that you hold part ownership of that company. Does that mean we own Reliance or we have the authority to make some important decisions for the company? Apparently not. If the company performs really well, we get benefit out of it, and if the company underperforms, we don't get benefit out of it. So that's how it basically works, guys. So the next question is, how does a stock come into an exchange? A stock comes into an exchange via a IPO. So what is IPO? IPO is initial public offering. So in simpler terms, IPO is stock launch. Just like a bike or a car is getting launched, a stock getting launched into an exchange is known as IPO. So what is the purpose of IPO? So the purpose of IPO is to raise funds. The funds will be going into the founder's hands for the future development of the company, and the funds can also be used to pay off the debts as well. So this is the purpose of IPO. So this is how the normal system works, guys. So we'll go on to the next topic, which is the different financial instruments in stock market. The first financial instrument we'll be covering about is equity or shares. Equity is one of the most popular form of investment ever. The most important aspect in equity is that it produces returns which is much more higher than any other financial instrument. The example which I gave for Reliance can be considered as an example for equity or shares. So if you hold a particular share and you become a shareholder, obviously you tend to get benefited if the stock performs really well, or if you tend to lose if the stock does not perform really well. So that reflects in the price fluctuations. So the next financial instrument is derivatives. Derivatives are referred to as futures and options. So it is a vast topic. We'll try to cover it up in the next upcoming videos, but I'll try to brief it up in this video. So futures and options can be used to hedge your portfolio. In order to reduce the maximum risk, we use futures and option strategies. So for example, if you hold Reliance shares at 1000 rupees, and if Reliance falls from 1000 to 800 rupees, obviously we are at a loss of 200 rupees. In order to reduce the maximum loss from 200 rupees to almost 180 or 170 rupees or even more, we use we use some instruments like options to reduce the maximum loss or to increase the maximum profit potential. So that is known as hedging, guys. Separate option strategies are also there in order to generate some extra returns. So we will be covering about that from basic to advanced in the upcoming videos. So the next form of investment is bonds. So bonds are issued by government securities or private sector companies. So bonds are said to be the most conservative form of investments ever because they provide decent returns with lesser risk. The point when bonds come in handy is when we hold shares for more than 50%, we can try to hold at least 20 or 24% in bonds so as to diversify our portfolio. So that time bonds come in handy. Or people who are really conservative in the investments can go to bonds. And the next financial instrument is mutual funds. Mutual funds does nothing but collects money from a pool of investors and try to diversify into different asset classes. They invest in stocks, bonds and other asset classes. So what they do is they provide proper diversification. The risk is properly diversified into different asset classes. It's one of the most popular financial instruments in India. When people try to get into investing, the first thing they get their hands on is mutual funds. And so next topic we'll be having a look at is the benefits of being a shareholder. So there are many benefits in being a shareholder, guys. The most important benefit is capital growth. So if you hold a particular stock, obviously the stock can grow to a huge level. obviously the returns are massive. The stock can grow from 1x to, I mean, the stock can grow to 5x or 10x or even 100x in a period of few years. So the compounding is massive. The returns can be generated to a greater extent than any other instrument ever. So the returns are limitless. That's one benefit. And the second benefit is obviously the dividend payout. So what is dividend payout? If a company produces greater results, and if it holds a great business, and if it produces greater results on every quarter on quarter basis, it pays out some of its profits to its shareholders. So that is known as dividend payout. Dividend payout varies from 1% to 5% or even more based on the company situation or the company performance. So the shareholders get benefited from dividend payout as well as the capital appreciation. For example, if I hold ITC shares, obviously I'll get a dividend payout of 5%, and on top of that the capital appreciation will also be there. So if the ITC stock moves up, I'll be profitable. On top of that, every year I'll be getting minimum of 5% dividend payout, which is as good as fixed deposit returns. So that's the power of investing in stock market, or that's the power of being a shareholder. Some other benefits are like, I mean, if you are a long-term investor and if you hold a stock for more than 1 year, there'll be some tax benefits as well. And other benefit, or I wouldn't call it a benefit, but I would like to say that stock market is simplest or the cheapest form of investment ever, because even if you have 10 or 20 rupees or 100 rupees, you can invest in a particular stock. But that's not in the same case with different asset classes like real estate or gold. So this is the best thing, guys, because if you have even the lowest amount can be invested in stock market, that flexibility can be provided only in stock market and not in any other asset classes. As a beginner, everyone tries to invest in stock market, but a thumb rule which most people follow is 100 minus your age rule. For example, if you're 25, you can minus the age with 100, which is 100 minus 25, which is 75. So you can invest 75% of your money in stock, which means if you're at the age of 25, 75% of your holding should be in stocks and 25% should be in other asset classes, because stocks are considered to be risky form of investments, and obviously it takes time to grow, but if it grows to a great extent, and you'll be able to experience the power of compounding as well. But if you're at the age of 60 or 70, obviously 30% of your money should be in stocks and the 70% of the money should be in bonds or conservative form of investments. So this is a basic thumb rule. If you want to follow, you can follow. It solely depends on the kind of risk you are willing to take. And moving on to the final crux of the video, which is whether stock market is a gambling or an opportunity. So what I hear from most people when I say that I'm into stock market is they tend to say that it's one of the most riskiest form of investment ever. We'll try to decode whether the stock market is gambling or an opportunity. So if you have the right skill set, training, knowledge and the experience, stock market is an opportunity to earn money, that's for sure. But if you come to stock market expecting to earn some quick bucks, or expecting to get rich quickly, or expecting to earn money believing only by luck, or get into stock market considering it as a lottery ticket, obviously you are going to lose money, and it is pure gambling. From my perspective, I would say that stock market is a very good place to make some decent returns. So I would recommend everyone to at least invest some of your money into stock market to experience the power of compounding, because the power of compounding is magical and you would never regret it. So that's it, guys. We'll be covering about a different topic in the next video. Thank you so much for watching the video. Signing off. Until next time. Cheers.